The Bitcoin ETF boom is here, and it's changing everything for institutional investors. With multiple spot Bitcoin ETFs now approved in the US and abroad, digital asset strategies are evolving fast. This isn't just about easier access, it's about how the biggest financial players are now entering the blockchain space. The appeal of Bitcoin ETFs to institutions. Bitcoin ETFs offer a regulated, secure way to gain exposure to Bitcoin without needing to handle crypto wallets or private keys. These ETFs are backed by real Bitcoin and fit well into the risk frameworks of traditional institutions. They're easier to justify to investment committees and boards that need regulatory clarity and compliance structure. For institutions that once avoided crypto due to security or technical concerns, ETFs are a game changer, driving market liquidity and price stability. When institutions buy ETF shares, the issuers must buy Bitcoin to back them. This creates steady demand and improves market liquidity on the spot market. More liquidity means less slippage, more accurate pricing, and more stability over time. Retail investors can also benefit as price discovery becomes clearer and volatility starts to level out. According to CoinShares, Bitcoin ETF inflows topped billions in just the first quarter after approval, a sign of major institutional interest. Institutional strategy beyond the ETF. ETFs are just the beginning. Hedge funds, asset managers, and banks are developing broader strategies that include DeFi protocols, stablecoins, and even altcoins. Some institutions are working with digital asset consultants to build portfolios that go beyond Bitcoin, seeking tools that help them manage crypto assets, reduce volatility, and tap into new yields. The role of DeFi and post-ETF investment flows. Now that regulated ETFs have opened the door, institutions are exploring yield-generating DeFi options. These include liquidity pools, staking, and decentralized lending, ways to earn passive income without traditional banks. They're also interested in governance tokens and tools that let them participate in DeFi securely and efficiently. Real-world assets, the next institutional wave, the next big trend, tokenizing real-world assets like real estate, commodities, and bonds. This helps institutions modernize how assets are issued, settled, and traded. Blockchain can increase transparency, reduce friction, and make global transactions faster. What about stablecoins? Stablecoins are gaining popularity because they're low volatility and work 24/7. Institutions are now using them in lending protocols and liquidity pools, often with expert consulting support. They're also a great way to enter DeFi without the price swings of other crypto assets. The impact on retail investors. As institutional money flows in, the whole ecosystem benefits. Better tools, improved infrastructure, and more stable prices help everyone, retail and professional alike. What's next for Bitcoin ETFs? More ETFs are in the pipeline. Ethereum, ESG-rated, yield-bearing, and even hybrid products that combine crypto and traditional assets. Digital asset managers are now planning tokenized portfolios for a new class of investors. At KENSON Investments, we help institutions and startups navigate this fast-changing space. From Bitcoin ETFs to tokenized real-world assets, our team creates custom strategies that reflect today's market and tomorrow's. Let's build your digital asset future together.